Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. It looks like Google makes $1 billion a month and sends that money to Citibank or JP Morgan every month with the message, buy 1 billion Bitcoin, it's now worth $2 billion a month. Then Meta sends $1 billion a month, and finally Microsoft sends $5 billion. Are these the high-power rails? You know that these rails move $1 billion every day, or maybe $1 billion every hour, or every minute, right? And I think Bitcoin will take its next step up once we get there. The U.S. Securities and Exchange Commission allowed several spot Bitcoin exchange-traded funds at the start of the year. This was the first time in 15 years that thousands of institutional investors could invest in the top cryptocurrency. This was an important event not only for Bitcoin but for all cryptocurrencies and digital assets. It started a whole new conversation about the role of cryptocurrencies in standard investing, especially among people who work for BlackRock, Fidelity, Millennium Management LLC, and other big Wall Street firms. It also raised hopes for how Bitcoin and other coins would do during the bull market in 2024 and 2025. Several well-known experts said that Bitcoin's price would rise a lot as tens of billions of dollars are pumped into the cryptocurrency market through ETFs. They also said that Bitcoin would easily set new record highs after setting old ones. The truth has been a little depressing so far. Bitcoin's price has pretty much stayed the same since March, when it hit a new high of $73,000. Investors are eagerly waiting for what comes next for the biggest cryptocurrency by market cap. Michael Saylor, founder and executive chairman of MicroStrategy, says there is no reason to be worried because we are on track to meet our lofty price goals from earlier this year. In a famous fireside chat at the Bitcoin 2024 conference, along with Bill Miller, he talks about 3 big events that will take Bitcoin right away from where it is now to where we all want it to be. Saylor thinks that the price of Bitcoin will go up by a huge 100 times in the next few years, especially since the first stages of all 3 of these events have already begun. For Saylor, everything will work out in the end, and Bitcoin will go from being worth just over $60,000 to being worth millions of dollars per coin. Here are some clips from Saylor's smart talk about 3 important changes in the law that could make Bitcoin 100 times more popular and attract multi-trillion-dollar companies like Apple, Microsoft, and Google. See you at the end. Don't forget to share and like this video, subscribe to the channel, and turn on post alerts to get more videos like this. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks for your help, and have fun with the movie. I think there are 3 policies that will speed up the acceptance of Bitcoin by institutions. These are the 3 things that will make Bitcoin 100 times more valuable than it is now. As an institutional-grade asset, the first thing that needs to be done is to give it legitimacy. So fair rules about the product itself in the stock market. And in January, the first part of that came through when the spot Bitcoin ETF was approved. But the rule wasn't full because the SEC still doesn't allow the creation of ETF shares in kind. The SEC still doesn't let people trade options on top of spot Bitcoin ETF shares, and the acceptance was given reluctantly. I did it because I had to, but I didn't want to. What does that have to do with anything? The negative views that were voiced when the approval was given cast a shadow over many popular investors. From having a negative view, we need to change it to any opinion. As an example, why doesn't a government regulator say whether this asset is better or worse than that asset? That needs to change though. If I want to put Bitcoin into or take Bitcoin out of an ETF, I think that the lack of in-kind makes a redemption, which means that it's a taxable event. This means that if you buy an ETF and a 10x and then want to take your Bitcoin out of self-custody, you will be charged 30% of the Bitcoin. If you want to move Bitcoin from an ETF to a bank or another storage provider, you'll be charged as if you sold it, even though you didn't. There is a tax error right now. Being honest with money is the second plank. If I didn't want you to buy anything, I would set up an accounting rule that said you could lose money on the trade but never make money. The screw only goes in one direction. You can't win if I set up the financial system so that you always lose. If you do win, you have to act like you lost. And if you lose again, you could win 99 times. But if you lose 100 times, you only report 1 loss and no wins. Okay, that is just rude and unfair. So accounting that is both indefinite and concrete lets you lose but not win. It's also the name you give to things you don't want people to buy. That's why fair accounting was so important. As of January, it was not required, but it will be next January. That's a big step forward. We're about 75% of the way there, but we'll be pretty much there when 2 or 3 dozen companies all use the same fair value accounting method and everyone talks about it. At that point, you'll start to see companies. You should show gains of several $billion or tens of billions of dollars on that return, right? It will be a big deal. The third change in regulations that Saylor is looking forward to is the end of the SEC's SAB 121 accounting rule. The SEC put out a guidebook called Staff Accounting Bulletin 121 in March 2022. It tells public companies that they need to put on their balance sheets the real value of their digital assets. This is different from how custodial assets are usually treated in accounting, which is as off-balance sheet assets. SAB 121 tells banks and other financial institutions that if they hold crypto for their customers, they should list that crypto as a loss on their balance sheets. Basically, the advice says that companies and centralized exchanges have to tell the public how much and what kind of crypto they hold for their customers. Investors in cryptocurrencies have been very critical of the accounting rule because it makes it impossible for regulated banks to store digital assets for their very rich clients. Saylor thinks this must happen before big tech companies like Apple and Google will start buying Bitcoin and keeping it as a short-term asset. During his talk with Miller, the boss of MicroStrategy says that tens of billions of dollars will regularly flow into Bitcoin once this last piece of the puzzle is put together. Here are some more clips from the talk. The third thing is that we think it's bad for Bitcoin if people can't self-administer their own money. It would be an attack on Bitcoin if I passed a rule that said you couldn't custody. It's an attack on Bitcoin if businesses can't keep their own coins. If I ran a business that sold security services to institutions and took care of assets for Yale Endowment or a big hedge fund, and then the government passed a law that said I couldn't take care of your assets, that would be hostile. At the moment, SAB 121 is a rule that makes it almost impossible for a bank to hold Bitcoin. And the right way to look at it is that it's simply a rule that stops companies that want to custody from doing so. So the government is basically telling people, I guess you can buy the ETF, but the ETF can't use their bank to store the Bitcoin. They can only use a crypto exchange to store the Bitcoin, and we're going to sue the crypto exchange. So when the government is against the crypto custodian, the banks, and the institutional custodian, it hurts the ETF business. The third plank says that all that's needed is for the SEC, the OCC, and the FDIC to let banks like Goldman, Citigroup, and JP Morgan do business. Also, the CEO of JP Morgan said some things that might make you dislike the company. But I can promise you that JP Morgan will start the process to hold Bitcoin within a year or two of when it becomes possible to do so. They will hold Bitcoin for 4 years because it is money, and that's what they do. That's why you want Goldman Sachs, Morgan Stanley, Citigroup, and JP Morgan to be able to hold Bitcoin. If they can buy it for you. They can also sell it if they can buy it. If they can buy, sell, and store it, they will lend you money against it. They will also give you return on it. So the world will be different once banks can store Bitcoin. I could store Bitcoin at a bank with $1 trillion balance sheet that is too big to fail. That's how much money they would give me. You get 550 basis points risk-free if you put your money in T-bills right now. I believe banks will offer Bitcoin holders 550 basis points without any risk when they are able to hold the Bitcoin. In other words, things would be very different if you got 5% interest on your Bitcoin while you still had it.